QuickBooks Pro Plus Desktop 2022 OneNote presentation, bank reconciliation, month number 2, checks and account decreases. Let's get into it within 2 weeks. QuickBooks Pro Plus Desktop 2022 2000 double deuce. Here we are in OneNote. If you have access to OneNote, would like to follow along, icon left-hand side, topic introduction, 9145, bank reconciliation, month number 2, checks and account decreases tab. Also take a look at the immersive reader tool, topic introductions in the text area 2, same name, same number, but with transcripts. Transcripts that can be translated into multiple languages, either listened to or read in them. Same name and number as presentations as well, topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, bank reconciliation for month number 2, February in this case. Here's the balance sheet. Here's what's on our books, the 95,779.09 as of February 28th. That's different than what's on the bank statement, in part due to the outstanding items, outstanding checks and deposits, and in part due to items that we have not yet included in our system but are on the bank statement. Last time we went through the beginning balance and the deposits, the beginning balance tying out this time because it's the same as the last cleared balance, and then we went through the deposits, checking off all the items that are on the bank statement to our books, the cleared balance for the bank statements and our books, then reconciling. So we've kind of ticked and tied off these 2 items. Now we're going to the decreases, remembering that if you're talking about actual checks, the decreases, you have the check number then to rely on, but the check date will not be as dependable because it's going to take more time for it to clear. If it's an electronic transfer, the date then will be more dependable, closer to the date that you actually recorded the transaction, but you won't have the check number, and you will most likely have memo transactions giving you possibly vendor type of information in that instance as well. So we're just going to be ticking and tying off now, remembering that we're going from the bank statement to the books because we expect everything on the bank statement to be on our books. If something's on the bank statement and it's not on our books, we're probably going to have to add it to our books unless the bank is wrong, which is not typically the case. If it's on our books but it's not on the bank statement, then we expect that to happen in some cases with regards to the outstanding checks. And in that instance, we'll verify that the outstanding checks have cleared in following months. If that's the case, then those will be our reconciling items. So we're going to go through, we're going to tick and tie all these off. So we ticked and tied everything off here. The only thing that we couldn't tick and tie off are these 2 items down below, which is the bank service charge and the withdrawals, because those are examples of items that are on the bank statement that we would not have known about because they just took money out of our account, for example, for the bank service charges, and we didn't know about them until they told us with the bank statement. So unless we're going to argue with them, we got to add those items to our books so that they will not be a difference anymore. Notice there are other items on our books that are not on the bank statement. Those we might expect as being outstanding items. Now, note that you do want to check these to make sure that they cleared in following months. So, for example, this one up top that we wrote in January didn't clear in January and it didn't clear in February. That seems a little bit odd, so we're getting more suspicious that possibly that one is not going to clear for whatever reason, and we might want to check up with that vendor to see if the check got lost in the mail or what is going on with that item. That's one of the big things that you get from a bank reconciliation, as well as verifying your other accounts, is to kind of check to see, I wrote the check, I sent the check out, it didn't clear. What is happening at this point in time. The other ones are closer to the end of the month, so we expect those to then clear in the following month. Those are just going to be the reconciling items. Also note that we checked off these items up top that were things that we wrote in January that cleared in February. So we're not changing the date that when we wrote them. We're saying that they cleared during this time period. That's the timing differences. So now we've got timing differences on both sides of the transactions. We got the items close to the cutoff date on February 28th in this case, items that we wrote that haven't yet cleared, and we've got the items on the starting point, the date of February 1st, for example, that we cleared stuff that we wrote that hadn't cleared the bank yet. So now you got that kind of overlap between these timing differences that are going to be taking place. So it's possible that we still have, like we have here, a check that didn't clear in January or February, it still could be a legitimate check and this vendor just isn't cashing it for whatever reason. And so it hasn't cleared the bank yet. So those are the ones that we're going to be more focused more on to see if there's an issue with those kind of items. So we're still off by the 520. Those are the two items we haven't added. We're just going to add them now because we're going to assume that the bank is correct. So we're going to go in here and say we add the draws. Now this time this was a cash withdrawal. And remember, we would like to be able to train ourselves or our clients to say when you draw money out with cash, that you're doing it for personal use. You're taking it out of the business and taking it for personal use. Because if you're using it within the business, we don't have the documentation for an audit trail for the expenses, which we would like to have. So if that is the case, then I can just say, okay, I took money out for cash. I'm just going to call that a draw. That means it's not going to go to an expense account, but rather to an equity account. Once I enter it, I can then check it off. So we fixed it now. That has been fixed. And then the second one was $20 for bank service charges. Again, I'm not going to, unless I'm going to argue with the bank, I got to add that to our book. So I'm just going to say $20 service charges, go into the service charges. Then I can check those off. And now we're in balance. We're in balance. We can check it off. We have a bank reconciliation here. No, this is not a bank reconciliation. This is the process of reconciling. And once we hit this little button down here, then we will have a bank reconciliation created, which is a report that's going to be tying out the books versus the bank, showing us what the difference between the two are, which is all the stuff that hasn't been checked off, all these items that haven't been checked off, which are the uncleared checks and deposits, which we would expect to clear in the following month. We don't want to hit that little reconciliation button unless you got that thing completely at zero, which should be possible considering you're just ticking and tying everything off. And if something's different, then you're going to fix it unless you're arguing with the bank. So it should be something that you can do, and we'll actually check it off next time, keeping us in suspense. So don't miss the next episode when we hit that blue button.